Hello, everybody. Hope you had a great weekend. Stocks obviously had a very good weekend. I'm actually quite surprised by today's session. We were gapping down on the most stupid of situations this weekend. I can't believe that Doha oil meeting was such a big deal, but whatever. It was. Oil gapped down big in the morning, but a big reversal overall from the intraday or overnight lows. The Nasdaq finished up 0.44%. Nothing to complain about there. The Russell 2000 led the way up 0.74%. And the Dow Jones Transportation Average up 0.31% also was looking great overall. So round and round, no matter where you go, Dow Jones Industrial Average, S&P 500, NASDAQ, all indexes are hitting new highs and all indexes look very strong. It's lacking volume overall in the indexes, but we're not lacking volume in individual leading stocks. And on that note, flagged so many today. I mean, GVA is flagged. Let's see, let's just start going through them all. WSFS, a breakout. PLOW, breakout. And this is just across all sorts of different sectors and industry groups. It's interesting to see the bearishness rise in the AAII survey, the II survey, the NAAIM exposure index. See the University of Michigan confidence numbers hit its low, and the Gallup poll bearishness hit its level. And Bank of America clients have been selling all year long, but yet we have a market hitting new highs. This is a very rare event. Everything is lined up, which should produce significant gains over the intermediate term. However, after 2008, all hope is lost on my end of ever believing anything that I ever see in my charts. But for right now, it really kind of doesn't get much better than the setups overall, and the mere fact that we didn't sell off further following the gap down is quite incredible. But GDEN, as you can see here, breaking out to new highs. I consider this as a new long position. But these thin stocks have really been bothering me lately because they keep shaking me out with my stops, which means I have to change my methodology investing in thin stocks. ODC also, pocket pivot point signal. The best setup for a volatility contraction pattern right now is BSFT. I'm 100% pretty sure that this was it might have qualified for a perfect speculator scan back in October, November, December. Sometime in November, December here, I'm pretty sure this was a perfect speculator qualifier for the pre-speculator 2 scan. Not anymore because it doesn't have that previous 100% gain, but you can see here, ton of accumulation, strong green bop, lower volume on the 2 consolidations here. This volatility contraction pattern, though, is way, way, way tighter, and it actually has less volume than before with more accumulation. So overall, very, very solid setup with BSFT. Also, CTRP, ctrip.com. Also, as you can see here, volatility contraction pattern shaping up. Very, very low volume in this handle. Buy stops are going to be set on me in a couple days on this one if it doesn't break out. BSFT, I'm going to set buy stops in the margin account. My cash account is completely maxed out. And right now we're just rotating out of laggards into leaders for the cash account. And then also BLOX. This is a 99 EPS stock. You can see the accumulation it's getting off the lows. IRWD, biotech stock bouncing off the 200-day moving average. PKY, a REIT stock, another pocket pivot point signal. So it's broad, it's everywhere, it's hard to fight it. This evening, I have 2 new long positions that I want to go ahead and take. CBPO, China Biologic Products, is breaking out with a pocket pivot point signal. We went long this stock back in November. We were able to leave with gains, but unfortunately it shook us out in 2016. But if you look at the longer term pattern from, let's even go longer than that, from its lows in 2011 to today, the stock is up 1,460%. And it looks like that it wants to set up for another big run on a weekly. You can see very tight trading. Look at how much volume is now in this stock compared to where it was before 2015. It's been a slow, steady accumulation by someone. So if this stock breaks out to the upside, it should really run. China Biologic is a high-quality canned slim stock. I think the earnings per share rating is like 95. I didn't look up all the earnings and sales growth on MarketSmith, sorry. And also, it is also a perfect speculator scan qualifier. So it's in our top 2 scans. Pocket pivot point signal. I don't want to chase it here, though. So where my limit order is going to be is right above 125.76. It's at 127.14. A moderate pullback will get me long. The stock runs without me. So be it. Fully invested. I'm sure with this market continues to act like it acts, I'll get another new long signal and something later on. And also the other long signal today is in PayPal. PayPal is bouncing right off its 50-day moving average, following that gap down in late mid-March. It got a big support, heavy volume. It's traded sideways since then with volume below average every day. There's been intraday reversals, and on the strong close, the green bars. So not only with the intraday reversals do we have heavy volume, but the tall bars that are below average happen to be accumulation days. It's bouncing off the 50-day moving average here, breaking out above the most recent resistance level. So PYPL will be a new long, as it's pretty much on top of every moving average. The 10 is below the 20, but they're all tight, getting all congested on top of each other. The 50-day moving average is also touching price. CBPO, similar situation, 5200's tight. While the 20 isn't touching price, the 10 and 5 is right there, and everything is tight, lined up, 5 above 10, 10 above 20. So if I can get it on the pullback, it's worth it. But these are the two best setups. I was also considering going long Granite Construction Incorporated, heavy construction stock, nice pocket pivot point signal, kind of close to the 50-day moving average, but it's extended from the 200-day moving average. And if you look at the history of this stock, breakouts from short basis do not work on this stock, so I'm going to pass. Also, the 10 is below the 20. I know it is on PayPal also, but once again, PayPal is not extended from its moving averages, where GVA slightly is. So just PayPal, just CBPO. CBPO, 3%, 2% for CanSlim, 1% for Perfect Speculator. PayPal, 2% for CanSlim, 1% for it being a recent initial public offering. So those are the only two longs. There are no sells. We don't have any stocks short, so it doesn't get much better than that. I mean, two new longs on an update, no sells. We're already fully invested, so not much else to do there. But there is one problem child. There are two and only two perfect chart setups so far that we've actually been able to get long. One is Graham. Graham in about, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 trading days has produced a 61 per, in 11 trading days has produced a 57% gain. All is well on that one, except for, sadly, just a few days after we went long, the damn thing decided to shake us out of half of it whenever it traded below 377. Had I not been using sell stops on Graham, we would still have our full position in Graham up 57% in 11 days in Graham. However, by using sell stops on this perfect yet thin stock, I was shaken out of half, which then brings me to the biggest discussion of today, PZE. Thanks to the oil gap down, all hell broke loose in this thin name in PZE, as the stock decided to open up at 605, trade down to 585 before reversing all the way back to closing green at 665 for a 1% gain on the day. That is an extremely wide intraday range. As you look at this chart just going back here, you can see it hasn't quite had a move like that in the middle of a consolidation pattern since really July, and it wasn't good there. So here it has its move as it was basing out on a strong accumulation, max green bop, and still did what it did. If I don't have sell stops, I don't get knocked out. But before that, let's even go back further. At this point on April 1st, this stock should have broken out after 4 straight days of huge accumulation and pocket pivot point signals. The fact that it didn't break out is a red flag. However, it held up, but on the 7th, it decided to trade below a couple of sell stop levels. If I don't have those sell stop levels, I don't get knocked out of either one. But instead, I got knocked out of one here, 622, and then I had one at 637. So the 637 and 622 got knocked out. 2 days later, all is well with PZE. We're back to max green bop and an uptrend stock. And then a few days later, we kind of get a half-ass signal, but it loses its max green bop, but still pretty much is a go. Then breaks out on the 15th. So all looks well. Got shaken out of some of it, but with this move here, I was able to get half of those shares back. So now I have 3/4 of the position that I want to have, and then today happens, knocking me completely out of the stock before reversing. Now what I decided to do is when it was reversing, it was around 661, 662, and I was like, if this damn thing breaks out, I do not want to miss it. So since yesterday's high, or Friday's high was 665, I put my buy stops in at 666. Buy stop limit 667, ripped higher, and traded slightly back down to 665. So this stock is becoming a nightmare. It's not a large position, but with the chart pattern that it had leading up till today, this should have been one that performed like Graham, 11% gain or 57% gain in 11 days. Instead, it's just becoming a nightmare. So I'm long again PZE. Even I don't know what the original amount of shares. I'm down to, I think I have, 600 shares now. All right, what is the original position? Would have been around at least 1,400. So I have under half of what I would want to have from the original position. So I have 600 shares of PZE, and there are no sell stops on the book. I will have to let this thing close on an end-of-day basis below. Right now it's 585 is what I'm looking at before I get out of it. But same thing with Graham. I have taken my sell stops off the book. Intraday, UFAB hit half of my sell stops. I'm going to go ahead and keep the last one on the book, but here's just another lesson of not having them. And then APLP, another speculative holding, hit half of my sell stops as I put it at 1041, traded down to 1007 before reversing and now back at 1092. So these sell stops and these speculative names are becoming hellish, but they're necessary. APLP I don't mind. It's not really thin. But the stocks like PZE and Graham and UFAB that are super thin like this, no more sell stops are on the book. So we're just going to keep them live and hope that they don't, trade down and then close down 80% one day, which I really doubt it. But the bottom line is the market looks good. CMI and MDVN both entered the perfect speculator scans today, so I'll start to watch those pretty closely.